investors.
It's a Cinderella story for the Walt Disney Company tonight. The media giant turns in an after-the-bell earnings report that paints a glowing picture as the company seems to be hitting home runs in just about all of its business lines.
An investment group makes a run for the Borders. It has bought a big stake in the book and music chain. That sends Borders Group shares up almost 10% on the day.
It's beginning to look a lot like Christmas at Starbucks. The coffee company rolls out the red cups and other items to get ready for holiday sales. We talk with Starbucks CEO about what's ahead for the Coffee Kings.
Also tonight, don't let this machine's small size mislead you. It does a big job, and it could save your life. We'll explain in tonight's Bill of Health segment.
I'm Paul Kangas.
And I'm Susie Garrow. This is Nightly Business Report for Thursday, November 9th.
Nightly Business Report is made possible by
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. A treasure island of earnings for the Walt Disney Company late today. After the closing bell, the media giant posted better than expected earnings and revenues. Disney made 36 cents a share in its fiscal fourth quarter, 2 cents more than estimates. It also reported a 14% gain in revenues, $8.8 billion. The big drivers, theme parks, movies, and media, with stellar performances from the Pirates of the Caribbean films, ESPN's networks, and attendance at Disney World and Disneyland. Meanwhile, media giant Viacom reported better than expected earnings for its third quarter, 50 cents a share. Analysts were looking for 48 cents. Still, that's down more than 10% from Viacom's year-ago profits of 60 cents a share. Disappointing box office results from its Paramount films offset higher ad sales at the MTV network's cable service. The company also announced its CFO, Michael Dolan, is leaving at the end of the year, and Chief Administrative Officer Thomas Dooley will take his place. Joining us now with more analysis on today's numbers from Disney and Viacom, Tuna Amobi, Senior Media and Entertainment Analyst at Standard & Poor's. Hi, Tuna.
Thanks for having me.
Well, those are pretty strong numbers from Disney today. Do you think that the company can keep up the momentum throughout its first fiscal year?
I think clearly this robust result sets them up for a very strong fiscal year. If you look at the underlying trends, the theme parks or the film entertainment or the media networks, I think the story is across the board strength. Clearly, there's some underlying momentum going. I think the outlook that they have for double-digit growth, at least through the next fiscal year, seems pretty much intact.
Does Disney have any movies, or from whether it's Disneyline or Pixar, that are in the pipeline that could turn out to be real blockbusters for the new year?
Sure. Well, if you look at the slate, I think there's a number of very key titles coming up. First of all, Pirates of the Caribbean DVD sales, I think, should ship very strong for the holiday season. If you look ahead to next summer, there's a number of key titles coming up on the Pixar as well as the Walt Disney Pictures side. Overall, I think the film division should continue to ride the solid results that is generated, which should enable the company to not only reap the benefits in film, but also the cross-platform synergy. So whether it's Ratatouille from Pixar or A Day with the Robinsons, as well as other titles that we really have high hopes for.
Taking a look at Viacom, Viacom's chairman and Sumner Redstone said today that the company's on track to deliver good results for the rest of this year, and that's despite problems at the Paramount Studios and this big management overhaul that they've had. Do you buy into that?
Well, I think Viacom will still have concerns with the pace of the restructuring at the Paramount Studio. We also have some concerns with the advertising growth at MTV Networks. But overall, I think the new management team, it seems like they're staying the course. I would venture to guess that their honeymoon period with the street is almost over. So I think the pressure is going to be on them to deliver consistent results. I think no one is is more obsessed than stock price than Sumner Redstone, and perhaps rightly so. So investors will keep a keen focus on that.
Well, speaking of the stocks, Disney stock has been on the rise. Viacom's has been struggling. What's your view on Disney and Viacom?
Well, I think Disney clearly, has demonstrated that there's the underlying momentum in the core businesses, which is why we're recommending the stock. Over the next 12 months, we believe there are core catalysts that's going to drive the stock perhaps, higher than 35, which I think could present some resistance. If you look at Viacom, the story is somewhat mixed there. Ad sales are somewhat tentative in the U.S. and internationally. Affiliate fees seem to have somewhat maxed out. I think MTV is yet to demonstrate that it can be a very significant player in this digital space, particularly with the kind of young demographics that it has. So overall, I would maintain a neutral stance on Viacom.
Just in terms of disclosure, do you own either one of these stocks?
I neither own nor do I have any affiliation with Disney nor Viacom.
All right. Thanks a lot, Tuna.
Thanks for having me.
We've been speaking with Tuna Amobi, Senior Media and Entertainment Analyst at Standard & Poor's.
Wall Street's blue chips moved lower this morning as oil prices rose and the University of Michigan's November Consumer Sentiment Index fell. But the NASDAQ headed higher on yesterday's good earnings we told you about from Cisco. So at noon, the Dow was down 32 points, but the NASDAQ was up 12. Persistent weakness in the drug, defense, and healthcare stocks dragged the market in general down this afternoon, resulting in a broadly lower close. The Dow Industrial Average lost 73.24, ending at 12,103.30. The NASDAQ Composite off 8.93, ending at 2376.01. Standard & Poor's 500 index dropped 7.39 to 1378.33. In the bond market, the 10-year note gained 4/30 seconds to 99 and 31/30 seconds, putting the yield at 4.63%. It's official tonight. The Democrats now have control of both houses of the 110th Congress. It came as Virginia Republican Senator George Allen conceded this afternoon to Democrat Jim Webb. Now that the dust is settled on just who's in charge, the next order of business will be significant for business. Stephanie Dew takes a look at the key committee chairmanships.
The changeover in Congress from Republicans to Democrats is most dramatic in committee. In the Tax Writing Ways and Means Committee, for example, Charlie Rangel, one of the most liberal members of Congress, is taking the place of Bill Thomas, one of the most conservative. Former Congressman Charlie Stenholm expects Chairman Rangel to be more open to new ideas.
I would be very surprised if he doesn't open with serious hearings on tax reform. Instead of just talking about it every 2 years about these new ideas and flat tax and all of these things and value-added tax, actually hold hearings and actually get some discussion going.
There may be a discussion of runaway CEO pay as Barney Frank takes over from Michael Oxley on the House Financial Services Committee. The Government Reform Committee under Henry Waxman could increase scrutiny on Halliburton, pharmaceutical companies, and big tobacco. But the conversation on climate change may not be much different at the Energy and Commerce Committee under John Dingell as it was under Joe Barton.
Mr. Dingell is very close to Mr. Barton when it comes to the internal combustion engine because he has United Auto Workers, Ford, GM, others that he represents, so he's been very careful about regulating the Clean Air Act, which has significant impact on business. So you have to look at the personalities, where they're from, very carefully.
Business groups which largely supported Republicans expect the new Congress as a whole to be more moderate than the committee chairman.
While we look skeptically at some of the leadership, we understand that there is a possibility that they will also want to work with us, and we're open to that. And I think they're going to have some assistance because I think that the conservative Democrats in both the House and the Senate have just expanded their ranks.
The talk in Washington the last 2 days has been all about bipartisanship and cooperation. Experts say Democrats have a vested interest in proving they can work with Republicans to get things done. If Democrats succeed, they have a better shot at keeping control beyond the next 2 years. Stephanie Dew, Nightly Business Report, Washington.
Starbucks decked the halls today, all 9,000 of them. It wrapped all of its U.S. coffee shops in red and rolled out a slew of holiday offerings, Christmas coffee blends, gift items, and gift cards. Starbucks CEO was making the rounds in New York today, starting at the NASDAQ, where he rang the opening bell. When I talked with James Donald this morning, I asked him how important the holiday season is for Starbucks.
The holiday season for Starbucks is very important for a lot of reasons. For financial reasons, it's our biggest quarter in terms of total revenue, but it's also the opportunity to connect more with partners as our transaction growth grows as well, and we're able to provide the environment that we do every day to even more customers over the holiday season.
Mr. Donald, you announced recently that Starbucks is going to open 2,400 stores worldwide with the goal ultimately of 40,000 stores. What is the goal? What is the strategy here?
Our goal is one store at a time, one customer at a time, one partner at a time, meeting the needs for our customers and our partners alike. And if it gets to 40,000 stores in a certain amount of time, that's great, but there could be some upside to that as well.
It seems like everywhere you look, there's a Starbucks store. Where do you see this opportunity to grow?
As the urban environments and the suburban environments change, as they spread out or as they contract, we find that we might not have had a store in a location that we might have missed, or it wasn't populated enough to put one there. So we find those sites as well. And there's opportunities for us in malls across the world, as well as remote locations, which are smaller areas or off-highway areas.
You were telling me that this expansion works out to 6 new stores a day. How do you manage that growth and still maintain and grow your current store base?
Our business is all about people, and our partners are our biggest asset. And so from a one-store neighborhood to a 12,500 store company, we look at it that way, and the training that we put in place and how that we connect with our partners enables them to execute on a daily basis in every store across the world.
We know that people who regularly get their coffee from Starbucks are very sensitive to any price increases. What kind of pricing flexibility do you have?
We like to think that we notify our customers of these increases usually a week ahead of time. We help explain to them and our partners know why these price increases are being put in place and what they're going to do. And the customers understand that. And as we've seen in the past in 04 and in 06, our transaction growth continues to be robust and has not changed in terms of the normal growth patterns.
How do you feel about the big push from Dunkin' Donuts? We're seeing that it's opening many more coffee shops all over the place, and their coffee is cheaper. Are you concerned that they are going to eat into Starbucks' market share?
Our competitors and the other coffee companies that are getting into super premium coffee are actually helping us educate the overall customers about the super premium quality coffee and what a great cup of coffee tastes like. So what we're finding is that there's room for all kinds of individual companies and independents to get into the super premium coffee, and it helps us at the end of the day.
I see that Starbucks is also moving into entertainment, music, movies, books. How much does this add to the bottom line?
Well, we don't look at entertainment as a driver of the top and bottom line. It is a piece of that for sure. But what it adds to the experience can't be measured. It's just a big, it's a big surprise and delight for our customers, and it adds texture to that experience and texture to what Starbucks stands for.
So what's the next big surprise that we're going to hear from Starbucks?
The next big surprise at Starbucks will be, I can't tell you that.
Well, we're here at the NASDAQ, and Starbucks stock has been moving up. What do you think it's going to take to keep the momentum going?
We're very excited about our international business. We're very excited about the return still of our stores in the U.S., and there's so much territory yet for us to expand. And if you look at our track record, it has been consistent as any company that I have ever known or worked for, but we are still in the very early days of opportunities at Starbucks.
Mr. Donald, thank you very much.
Thanks, Susan.
Now let's take a look at some stocks in the news tonight. For the second day running, big board volume leader Pfizer today on 37 million shares, down 78 cents. Then Texas Instruments, a 69-cent loss. Lucent dropped a penny. AT&T losing 95 cents. Fifth in volume, Motorola, a 27-cent drop there. C.B. Richard Ellis bucked that trend with a gain of $1.30. The big real estate services company got an upgrade from J.P. Morgan, and also J.P. Morgan boosted 2007 earnings estimates from $1.69 to $1.92, boosted its price target for Ellis stock from $31 to $38 a share, and after the close, Ellis stock was added to the Standard & Poor's 500 index. A lot of news there on that stock today. EMC up 34 cents, CVS down $1.01. Sprint Nextel rose 25 cents, and then ExxonMobil on the higher oil prices up 80 cents today. American International Group, the big insurance firm and a Dow stock, reported earnings right after the close today. Third quarter earnings jumped to $1.61 from only 66 cents a year ago, and after hours trading, the stock was up about 40 cents from this price. Then we see Hewlett-Packard up 68 cents. Goldman Sachs boosted its 12-month price target for the stock from $42.50 up to $46 a share. J.C. Penney up $1.35. Second quarter earnings, or I should say third quarter earnings, 22% higher than last year at $1.26 versus 94 cents there, and that was 3 cents above the street estimate. Same-store sales rose 5.2%. Gold Corp rising $2.22. The company's CEO forecasts gold prices will hit $850 an ounce in the next 2 years. The New York December gold contract today was up $18.50, ending at $636.80 the ounce. Borders Group rising $2.11. Reportedly, William Ackman, the head of Pershing Square Capital Management, has purchased an 11% stake in Borders. BMC Software up $2.87. Second quarter earnings 37, up from 27 a year ago. Revenues up nearly 7%. Company also boosted 2007 earnings estimates. Big loser of the day, Westwind One. This provides radio and television stations with programming, and third quarter earnings dropped to 12 cents from 22 cents a year ago. Revenues fell 15%. The company's board will evaluate alternatives to enhance shareholder value. Two public offerings today. KBW, this is the former Keefe, Bruyette, and Woods, the investment bank boutique. 6.8 million shares offered at 21, high 26. The high was 27.38, and then it backed off just a little bit. One Beacon Insurance was offered to the public at 25 and 24 million share offering. Cisco topped the active list up $1.61. The high today, 27.44 on those earnings that we told you about after the close yesterday. Apple Computer, 89-cent gain. Microsoft up 28 cents. Google fell $2.37. Research in Motion, a 12-cent loss, fifth in volume. And then Qualcomm dropping $1.45. Japan's Trade Commission warned the company it may have to investigate the business practices that the company's using in Japan. Intel, 29-cent loss. Dell moved up 80 cents. Broadcom, 3-cent gain, 10th in volume. Yahoo up 55 cents. Hanson Natural, the beverage company, down $4.14. Remember, this is the 4-for-1 split stock, but the company is delaying its quarterly financial report due to an ongoing review of its stock option grants. And those are the stocks in the news tonight. Susie.
Thanks, Paul. If you've been a patient in a doctor's office recently, chances are you may have seen an ultrasound machine. Now, thanks to technology originally developed for the U.S. military, new portable ultrasound devices are making their way into all kinds of new medical settings. As Jeff Yasteen reports in our Bill of Health segment, the small handheld machines are turning up in emergency rooms, surgical suites, and other places.
It looks like someone's laptop computer.
Unclip and release the unit.
But it's a complete ultrasound imaging system in a package weighing less than 8 pounds.
Those are actually the nerve bundles.
Because of that, ultrasound use is making its way from the obstetrician's office to the operating room. Anesthesiologist Dr. Howard Palty started using hand-carried ultrasound devices in the past several years.
With the ultrasound machine, we're actually able in real time to see the nerves, see our needle approach the nerve, and at the same time we can assess where our local anesthetic solution is distributed around the nerve when we inject, which we couldn't do previously.
These hand-carried ultrasound devices also are finding their way into emergency rooms, where doctors use them to quickly and easily examine tissues and organs for damage. The makers of these ultra-portable ultrasounds say the devices continue to get lighter and more sophisticated compared to traditional ultrasound machines, which typically cost more than $100,000.
A hand-carried system weighs 7.7 down to 3 pounds. They are roughly $50,000 in cost, and they're very simple and easy to operate, and they will work virtually anywhere in the hospital where you cannot get a cart-based system to the patient. You can always bring a hand-carried system right to the patient even to the extent that you can lie it right on the patient's bed.
Just 7 years ago, the market for hand-carried ultrasound devices was tiny. Sonosite's revenues were just $5 million, but have expanded rapidly since then. And that number continues to grow industry-wide, especially as cardiologists and other physicians use the systems as low-cost screening devices for hard-to-diagnose conditions like aneurysms.
Right now, the physician has to basically use his manual exam skills to detect an aneurysm. So the ability to provide a physician with a tool in their office where they can easily and quickly diagnose a potential aneurysm, I think is going to have major impact on healthcare.
As computing power grows, costs come down. Some physicians say you shouldn't be surprised if hand-carried ultrasound devices become as ubiquitous as stethoscopes in physicians' offices of the future. Jeff Yasteen, Nightly Business Report, Bill of Health.
Tomorrow, our Friday Market Monitor guest is Dr. Hans Black, chairman of Interinvest.
Tonight's commentator says it's easy to get good work out of your employees, and he has some suggestions on just how to do that. Here's Richard Levin, syndicated columnist and author of Shared Purposes.
You've probably seen or even written a performance review that says something like, this employee should go far, and the sooner he starts, the better. Even the strongest managers quake in their boots when they hear the phrase performance review. But evaluating someone's performance doesn't have to be the drudgery people make it out to be. Quite simply, a performance review is a way to measure whether people are doing what they're supposed to do. Of course, they have to know what they're supposed to do, and since most employees don't have X-ray vision, the manager's job is to clearly communicate the goal and identify the expectations for reaching that goal. This isn't rocket science. If you want your employees to perform, you have to tell them what you expect. The specifics of how they reach or hopefully exceed that expectation is often best left to them, because what's important is not necessarily how they reach the goal, it's about the results. It used to be, and in some companies it's still the case, that if your manager saw you at your desk for long hours, you'd be regarded as a dedicated employee, even if you weren't doing anything. Today, it doesn't always matter how many hours you work, but whether you get the job done. When it comes to excellent performance, it's about crystal clear communication, clear standards, clear expectations, and clear measures of accountability. Fundamentally, it's all about the results. I'm Richard Levin.
Recapping today's market action, a wave of profit-taking hits Wall Street. The Dow falls 73 points, while the Nasdaq loses almost 9 points. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on pbs.org.
And that's Nightly Business Report for Thursday, November 9th. I'm Susie Garab. Good night, everyone. Good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbye.
Nightly Business Report is made possible by
egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested in our clients.
Franklin Templeton Investments. After 50 years of worldwide investing, we see market opportunities through the eyes of experience. Franklin Templeton Investments. Gain from our perspective.
This program was made possible